Have you ever stumbled upon the acronyms PE, EPS, book value and market capitalization and felt a wave of perplexity wash over you? Fear not, for these financial terms are not as daunting as they may seem. In fact, they are fundamental building blocks to understanding the stock market and making informed investment decisions. Let's plunge into the world of these financial metrics, shall we? Starting with PE, which stands for price to earnings ratio. This is a valuation ratio of a company's current share price compared to its per share earnings. For example, if a company is currently trading at $100 per share and its earnings over the last 12 months were $10 per share, the PE ratio for the stock would be 10. It's a simple way to compare the relative value of companies based on what they're earning. Moving on to EPS, which stands for earnings per share. This is the portion of a company's profit allocated to each share of common stock. It is calculated by taking net income minus dividends on preferred stock, divided by the outstanding shares. For instance, if a company makes a net profit of $2 million, has 0 preferred dividends, and has 1 million outstanding shares, the EPS would be $2. Next up is the book value. This is the total value of a company's assets that shareholders would theoretically receive if a company were liquidated. By comparing the book value to the company's market value, an investor can get a sense of whether a stock is under or overpriced. For instance, if a company's book value is $20 million and there are 2 million shares outstanding, the book value per share would be $10. Finally, market capitalization, often called market cap, is the total market value of a company's outstanding shares of stock. It is calculated by multiplying a company's shares outstanding by the current market price of one share. For example, a company with 10 million shares selling for $100 each would have a market cap of $1 billion. Understanding these parameters is crucial in making sound investment decisions. The PE ratio helps investors gauge the fair market value of a company, allowing them to make comparisons with other businesses in the same industry. The EPS offers an indication of a company's profitability and is often used by investors to compare profitability on a per-share basis. The book value, on the other hand, provides a measure of what a company is worth if it were to go bankrupt and be liquidated today. Lastly, the market cap allows investors to determine a company's size, which can impact its risk and potential returns. In summary, knowing these parameters and their significance can equip you with the necessary tools to navigate the stock market. It can aid in identifying potential investment opportunities and help you make informed decisions. After all, knowledge is power, and in the world of investing, it can potentially translate into profit. So remember, PE, EPS, book value, and market cap are not just financial jargon, they are your allies in the exciting journey of stock market investment.